Hey traders, John Howley, officialjohnhow.com. In this video, I'm going to teach you a simple but pretty awesome trading technique to help you stay on the right side of the market from where the trend is in place. So anyway, let's get into it. Alright, let's actually get into this market, and what I want to do is I want to make my Bollinger Bands just smaller for now, or just like non-existent for now. The reason why is I'm showing you a chart right now, okay, and I'm showing you where there's a couple of moving averages. I've got a 200, I've got a 52, and I've got a 20, okay. Now, just for now, let's actually just focus on, let's actually just take the 200 off for a minute, okay. And let's just focus on these two moving averages here, okay? The 50 and the 20, okay? Now, what I'm looking at here on the 50 and the 20 is this. What I want you to do is this just chart reading technique. It's really important that especially if we're short-term trading, even if you're scalping, right? You want to be scalping in the underlying direction where the movement is strong. Makes sense? For example, if you have a market that's doing this, right? If we're this on a 5-minute chart, an hourly chart, a daily chart, where is the best place to get in? Are you looking to go short here, or are you looking to go long in this situation? Which one's better? Which one's going to give you a bit more profit? Going long, right? So what we want to do is we want to be able to go in the underlying direction of the trend. Same with the downtrend. The downtrend's doing this here. Do you want to be going long here, long here? I'm telling you right now, I've had a few trades in the past where that's happened, and it's been pulling teeth, right? Because one, you don't know how long that's going to last, and two, you're going against an overall trend, right? As you know, sometimes it's better just to wait for the rollover and go short here and go short here. Makes sense? That's the most probability. And obviously, you know, you're going with the underlying trend. You're going with that. You don't want to be going long here, because that's going against the overall trend. So when it constitutes a trend, I always say like, what trend? You know what I mean? Like, you know, is it a 3-month trend? Is it a 6-month trend? Is it a 12-month trend? What trend do I look at? And so I just got sick of listening to people saying, oh, look at the 12-month trend, look at the 3-month trend, stuff like that. You know, and I've done that before in the past, right? So I thought it's much easier to let the market tell me whether it's in a trend or not, whether it's in a short-term trend and whether it's in a bit of a longer-term trend. So I thought, what about the moving averages? And so if you look at the moving averages are going to tell you whether it's trending or not, just by the direction that the moving average is pointing. Makes sense? So as you can see, right? If we have a look at the moving averages here, you can see the 20 is below the 52. What's that saying? Is that the trend is now starting to go down, right? Starting to get weak on the downside. Makes sense? So that's what's happening through there. And the next thing you can see is obviously the 20 is below the 52, but they're also, what is happening? You're getting the 52 and also the 20 is starting to point down a lot more. You can see it's still pointing down. Now, as it pointed down, what did the market do? It went down, right? Now look what's happening to the market. It's now market starting to go back above. You're getting the 20 crossing back above the 50. It's showing that something's changing within that trend. Makes sense? So you're actually seeing this happen. So the 20 is like a 20-day moving average over the last 20 days. That's now crossing above the 52, showing that the 20-day moving average, the 20-day average of that market is crossing back above the 50-day or 52-day average. Makes sense? Which is like, you know, 3 months plus. So now we're getting the shorter term moving average, shorter term now crossing above the longer term, which is showing strength in that shorter term. And then suddenly you start to get that longer term, which is the 50 start to point up. Now what's that showing you? That's showing you now that we've got a bit of a longer term, bit of a 3 to 4 month trend now starting to point up. We've now got the 20-day trend, which is a month and a half or somewhere around there. It's only about 20 days. Oh, that's about a month. So it's around about a month. The month trend is also pointing up as well. Makes sense? So now we're actually got a trend where it's been pointing up. So as I said before, if the moving averages are pointing down, if the 20 is above the 52, well, you want to be looking for longs on, on pullbacks here, or as it's starting to take off, wait here and as it's starting to take off. Now, obviously, you're not going to just get in on trades just like that. You know what I mean? And again, I'm not saying that you just use this for an entry signal. Okay, just don't use this for an entry signal. I'm giving you some tools to help you read the chart better. You know what I mean? And obviously, trading the market is risky, and you need to have more than this. You need to have indicators, you need to have price action, you need to have patterns, good trade management, good money management to make money in the markets. I'm not going to BS you here because, you know, it is a difficult thing, but these techniques are going to help you stay on the right side of the market. Makes sense? And as you can see, when the market was going down, which one had the better legs? Was the sellers, right? Look, here we had a seller leg there, seller leg there, sellers there, sellers there, sellers there, right? So I'm not saying you're gonna go short, but by going short in these areas had a much better chance of doing well than going long. Makes sense? So that's the first thing I do say about moving averages when it comes to that. The next thing I want to say is look at the distance between them. Are we very close? So if you've got the 52, as you can see through here, if you've got the 52 and the 20 starting to get very, very close, this is constituting of going, the market's very sideways, and you don't want to be getting in this. Okay, you can see the market's moving down a little bit through here, and the market's pulling down, and you got it's actually pretty close through here. You know what I mean? It's not really spreading apart. It's coming close again. It's not really there's not really much activity happening here. You know what I mean? Meaning, like, the moving averages are pretty close. But what you can see through here, right? As you can see, right, is the market starting to break above, and the 52 is here. You're starting getting some good distance between the 52 and the 20 moving averages, and now we're starting to trend. Right? So what I do say is stay away from sideways chop through here and only look for when the market's starting to rise in a direction. And how you do that is by the direction of the moving averages, but there's also space between them. Makes sense? And then obviously if you want to bring on the 200, which I do have, that's also obviously a much longer one. And if that's also pointing up, which it is, then you've now got the real long term, the medium term, and the shorter term all pointing up. You know, that's obviously where you want to go. And as you can see, right, looking on this chart alone, if you just said, all right, if it's above the 20, above the 200, I'm just going to go long, you can see all the simple long situations here, you know, and you can see through here, right down here, you can see when the market started to expand out and a bit of a distance, you can see that the market was very strong through here. At the 20 started to point down a little bit more, and then it started to gap up, had a bit of run, and so on and so forth. Make sense? So anyway, guys, that is the video for today. If you'd like to learn more about how I view the markets, I'm giving away a free course. Check it out up here. 12 videos, 12 hours long, mistakes, trading techniques, trading systems, money management, you name it, all for free in that trading system. So go check it out. You're going to love it. This is John Howell here from officialjohnhowell.com. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.